Hi, I'm Wade Johnson, partner of Cutcher & Neal Wealth Management, and I'm joined today by our portfolio manager, Ryan Thompson, to provide you with a market and portfolio update for the June quarter. The June quarter delivered a strong rebound for global markets. Equity markets rallied, led by Korea and the United States, with semiconductors the standout, while easing tensions in the Middle East brought oil prices sharply lower. Global markets rallied strongly. The Korean Kospi rose 67.8%, the S&P 500 gained 14.9%, and the Nasdaq advanced 21.4%. Semiconductors were the standout, with memory chip makers leading the advance, as demand for artificial intelligence showed no sign of slowing. European equities also performed well. The Stoxx Europe 600 rose 10%, reaching a fresh all-time high, while the FTSE 100 gained 3.2%. Geopolitics moved from headwind to tailwind. A ceasefire between the United States and Iran, followed by a framework agreement in mid-June, reopened the Strait of Hormuz. Oil prices fell sharply, with Brent crude down 42.4%, easing the stagflationary pressure that had built in Europe. Even so, central banks leaned against inflation, with the US Federal Reserve turning decidedly hawkish, with markets pricing close to a full 0.25% rate rise before the end of the year, while the European Central Bank lifted its deposit rate to 2.25%, its first increase since 2023. Corporate earnings provided strong support, with US first quarter earnings up 28.6% year on year, the strongest result since 2021. Closer to home, Australia's economy continued to slow under the weight of higher interest rates. GDP growth eased to just 0.3% in the March quarter, though private investment, including data centre spending, was a bright spot. The labour market also softened, with the unemployment rate touching 4.5%, its highest since 2021, before a partial rebound in May. Inflation remained the central story. Headline inflation peaked at 4.6% in March, driven by record fuel prices, before easing to 4% by May. In response, the Reserve Bank of Australia raised the cash rate to 4.35% in May, before holding steady in June. The Australian dollar fell to a 3-month low against a resurgent US dollar, as a more hawkish Federal Reserve contrasted with the view the RBA's tightening cycle may be complete.
Throughout the quarter, the Investment Committee remained comfortable with global share market conditions, and our portfolios stayed fully invested. The Cutcher & Neal International Share Model delivered an exceptionally strong quarter, returning 18.32% for the period. Performance was led by SK Hynix, Caterpillar, Applied Materials, GE Vernova and Alphabet, riding the rally in semiconductors and demand tied to data centres and power infrastructure. During the quarter, we took profits from some AI-related names, helping to manage the portfolio's exposure to this theme while improving diversification across the AI supply chain. The Cutcher & Neal Positive Impact Model returned 8.78% for the quarter. Performance was supported by Palo Alto Networks, Life360, GE Vernova, Eli Lilly and Pearson, as software names rebounded from the March quarter's AI-driven sell-off. The Cutcher & Neal Australian Share Model returned 6.9% for the quarter. Performance was supported by Capstone Copper and BHP, which rode the strength in copper prices, alongside Life360, Qantas and BlueScope Steel. With the cash rate higher and the RBA still focused on inflation, we reduced consumer discretionary exposure and added to the materials sector, given rising demand for raw materials from the AI build-out. The Cutcher & Neal Fixed Income Model returned 1.94% as bond markets diverged across regions. In Australia, yields ended lower, with the 2-year yield easing to 4.42%, as markets began to think the hiking cycle may be complete. European yields also fell, while in the United States, a more hawkish Federal Reserve, now under the new chair Kevin Warsh, pushed US yields higher.
Overall, the June quarter delivered a strong rebound for global markets, recovering from a difficult start to the year. Easing geopolitical tensions and sharply lower oil prices provided a powerful tailwind, while resilient earnings and the ongoing artificial intelligence theme supported the rally. Encouragingly, gains showed signs of broadening beyond the largest companies. As we look ahead, the key question is whether that broadening can be sustained or whether doubts about AI returns and higher for longer interest rates begin to weigh from here. As always, I encourage you to reach out to your Cutcher & Neal advisor with any questions or to arrange a meeting. And we'll see you in October for another quarterly update.